The last video I brought y'all, I covered my last winning trade of 2024, closed out the year on a great note. And for this video, I'm going to be bringing y'all a recap of my first winning trade of this year, 2025. So the market was closed for New Year's Day on Wednesday. And then on Thursday, I was able to capture a lower day break for 200% return trading SPY put options. So we're going to look at the trade, the setup, and I'm going to look at a couple different. I'm going to look at the daily chart. We're going to look at the previous trading days data on Tuesday, and look at this level that was broken. So let's look here first. This is the simplest slide we're going to look at, and this is simply the low of day break. So here we had support, right? The market fell and it bounced from this level. This was at this point in time when I entered, this was considered the low of day, right? We have a low here, have a higher low here. This is the lowest point that SPY fell to during this trading day. So this is the low of day to be tested, the most recent support level. And my overall bias for the day was bearish. When trading low of day breaks, I like for the market to have room to come down or be on a downtrend, as we have been trending down. And then for high of day breaks, simply the same thing, but we would have taken out this high here, this resistance, a break to the upside. I like to trade those when the market is on an uptrend, when it has room to run on the 1 hour, the 4 hour, the daily chart. That's when those are more high probability, right? So I seeing that we made a lower high, this low, it's lower than this. So we're on this downtrend. We were rejecting at all the EMAs, and we get this kind of hook pattern, this rounding top, and this had this huge candle that closed with little to no resistance from the buyers. So I entered here on the start of this 5-minute candle. Price was around 586 and some change here, and I was able to ride that below that support level all the way down to roughly 583.5. And you'll see on some of the next slides, this did continue to fall, actually fell all the way to 581, which is the bottom of the daily chart's demand zone. And we'll see I have that charted. So yes, this could have ran more. I could have possibly got a 300 or 400% return, but 200% return is more than good money in the market. And we were already in the oversold range on the RSI on the 5-minute time frame here. So I was more than comfortable going ahead and locking in those profits. All right. So now we're looking at the daily chart. All right. Previous supply zone on the daily chart. So we had supply when the market was first testing this range. It rejected for about 2 weeks in a row here and couldn't break to the upside. However, once we break above, we come back and we retest that same range and it becomes demand, right? Break, come back, test it again, bounce, come back, test it again. Maybe we're going to bounce in the coming days, first couple of weeks of the year, maybe we run back to all-time highs. Nonetheless, you can go and hover over each of these candles on the daily chart and see what the low was, and you can see, roughly what kind of range we had in here. And it was anywhere from 585 down to 581. So again, when we broke that the low of day on Thursday was around 585. And so I knew if we broke that level, there was room down to 581. I wrote it down to 583 for 200% return. So this is how you can use different time frames and have your cross time frame comparison to see where supply and demand is, where support and resistance levels will be on the smaller time frames for your intraday trading. All right, this is New Year's Eve. All right, this is on Tuesday, the last market day that was open before Thursday when I took that trade. So looking back, you can see right here around 585, the level that was broken on that low a day break setup, there was um, a lot of buyers stepping in here, a lot of support. And you can see I refer to this as a psychological level. In the market, your whole round numbers are typically key levels, and especially ones that end in 0 and 5. Those are to be considered psychological levels. Just as people, as humans, I think we like those whole rounded numbers, and price can trade within them. So those are always key levels to keep an eye on. So I knew if this gets broken, there's room down 581. But I want to see, you know, I want to see some buyers step in because, or I mean, some sellers step in because the previous day buyers were holding this level. And then one other thing I want to point out real quick before we go to the next slide is just another example of a low a day break. If you watched my last video, you knew I took the break and retest. I got in here and wrote this down here with put options for profits. But you can see support, bounce, retest, huge red candles, right? Snaps below the low a day, and then we get more continuation down. So this is another example of where a low a day break setup would work when the market has bearish sentiment. All right. Now, just to bring all the other slides together, this is the setup that I took. All right, this yellow line is that 585 psychological level. This was the low a day at the point in time. Here's where I entered. We broke below. Again, I got out here and we still came all the way down to where I said we could retest somewhere down to 581. And then we reversed, though, all the way back up to that 585 level, right? So it's important in trading to go ahead and lock in profits. You don't want to get caught holding when large buy volume starts stepping in. Then you're waiting on it to come back down. So you hold through this. Time is eating into your contracts now too, and then it starts reversing and you break even or take a loss. So I now you can see why I took my profits when I did. All right, and then one more look. 200% return trading SPY puts. And there's the setup one more time. This is when I locked in my profits. This is not my most traded strategy, but nonetheless, when the market is not presenting chart patterns or divergence, my two favorite strategies, you take what it gives you. Always have different strategies in your back pocket that you can utilize whenever you need. And then if there's days that the market doesn't present any of your setups, it's best to just sit on your hand. Don't force trades that don't match your system and your strategies, and protect your capital. So hope hope you like this strategy. Hope it can make you some money in the future. If you have any questions about it, feel free to reach out to me on any of my socials or in the comment below on this video. See you on the next one.